China is having a pretty solid start to 2025, and manufacturing certainly this month looked like it benefited from some additional front loading. You've got looming tariff deadlines, of course, one approaching in just a couple of days here. And what it looks like is a lot of importers and, of course, a lot of Chinese exporters are benefiting from selling ahead of those tariffs hitting.
But your Beige Book report points out that the economy got better without consumption leadership. What kind of rebound is it then?
Yeah, it's a rebound that was, at least this month in February, was driven by and large by the industrial side. You had a strong manufacturing, commodities, looked pretty decent. And then there was a lot of, I think, a positive news, I would say, especially compared to where we've been in the Chinese property data that we got. You continue to see the housing market moving in the right direction. And I think that's something that a lot of investors are going to welcome.
But to Sherry's point earlier, Shehzad, with that, output in manufacturing picking up in your Beige Book last week, and of course the jump in export orders as well, how much of that is firms in China just trying to get ahead of the imposition of tariffs?
Well, I think there's no question about the fact that that is a lot of it. You have resumption of, factory activity in the aftermath of the holidays, of course. That's providing a boost to the figures. But there's just simply no question that, when you see export orders jump, directly to the U.S. also rise, you can tell that that's most certainly being driven by the risk of this escalating tariff war and trade war, which, of course, sets us up for a very potentially sour note for the manufacturing sector in the second half of 2025 and maybe going into 2026. It'll really all come down to how harsh the tariff imposition is, what the details look like. And then we all sit and try to track what a potential U.S.-China trade agreement or phase 2 deal could look like in the coming years.
So you're hopeful for a trade agreement, that you think that the diplomatic solution might be negotiated?
I don't think anytime soon. I think markets were far more optimistic about there being a deal between the U.S. and China. I think that's clearly looking like it was off the mark. And I think we have far more geopolitical uncertainty ahead of us in between the trade war, in between potentially more beefed up outbound investment restrictions, maybe firmer export controls. I think far more, tension and conflict is ahead of us, and not just jumping to a deal between these two countries.